Mark, welcome back to the show. Always a pleasure.
Dan, it's great to be with you.
So, you've been checking in with us on the regular past couple of years, and of course we do. We should also talk about our upcoming conference. Where you and I are going to speak at the Stansberry conference in Las Vegas. Um, I feel like at this point I should just be able to say what's on your mind because we've covered almost every time you've been on the show, like what you do and how the power gauge is built and all that. And I feel like if anybody wants to learn about that, they should probably, just maybe look at one of those previous episodes that they can find at investorhour.com. But right now, especially, because I know I have thoughts about the current moment. I think it's fraught with risk in some ways. But, I really, just for personal selfish reasons, like I want to know what Mark Chaikin is thinking.
You're too kind, and I'm still bullish.
Hmm.
We've been bullish pretty much every time we've been on the show since
Hmm.
January 17th of 2023, and the market just reached a really important milestone, the two-year birthday of the bull market on October 12th, last Saturday. And there's ample evidence that bull markets just keep going at that point. So JPMorgan Asset Management had an interesting study, and it actually was in July when it would have been even more useful, that bull markets averaged 3 years and 10 months, and the average gain is 110%. Um, as of last Friday, we were up 62% and 2 years in. So I'm bullish, but I do think it's a stock picker's market. And it has
Hmm.
been a stock picker's market really for the last year, through all of 2024, with a lot of sector and group rotation going on. And looking back at the power gauge is just a really valuable asset in the stock picker's market because it finds stocks across market cap spectrums and value growth and different sectors and industry groups that have attractive underlying, in most cases, fundamentals.
Hmm. Um, for some time, we've been seeing pretty substantially good performance and for some period outperformance too um, by the traditionally more defensive sectors like utilities were just on fire. Um, are you seeing that now, or are you seeing just a more everything I've been seeing in data and in just headlines, financial headlines, is talking about a really broad advance here. It's
Well,
does that jibe with
I think the pivot towards cyclical stocks is right here, right now, and I'm
cycling?
not a big fan of defensive stocks, except for utilities, which have turned into a growth industry with the rise of the AI data
Hmm.
center revolution. So I think utilities are a special case, but uh, consumer staples, healthcare, not my favorite place to be if you want to maximize returns. If you want to take a risk averse approach, okay, but um, we're in this to maximize investors' returns, find the strongest stocks and the strongest industry groups. And right now, I think you have to pivot to the cyclicals.
Hmm. Cyclical is like what? Home builders? Well, I'll just ask you
Well, yeah.
which you like.
Well, home builders have been on fire all through 2024, but I just think industrial stocks, aerospace, defense, at some point, energy will kick in.
Hmm.
Financials, in my view, is cyclicals, and the bank earnings that have started coming out in the last week are just on fire. They even
Hmm.
survived Jamie Dimon's typically dour comments after the JP Morgan earnings report. I don't get this guy. He's making a bloody pot full of money in JP Morgan stock and the bank's doing well, but he always puts that caveat in, well, the market's got problems, the country has problems. I
Yeah,
think it comes with old age, and he's getting on there.
maybe. It hasn't
He
affected you
certainly
that
makes
way.
headlines. Yeah, he
He
certainly knows how to
does.
make some headlines. Yeah.
He
Yeah.
does. Yeah.
Well, he was talking about a hurricane in the financial markets way back in
Right.
July, and there
Yeah.
I haven't seen a hurricane except in Florida.
Yeah. Yeah.
Yeah.
Those
For a
those
while, I was calling him Jamie the Hurricane Diamond because of that.
Oh, I love it.
Mm,
I absolutely love it.
That's
yeah.
right. Hurricane Dime, and in this corner,
Yeah, coming
Hurricane
coming off the
Diamond.
Hurricane.
top
Oh,
rope.
Yeah.
you're almost yeah.
Yeah.
Well, who is it? Reuben Hurricane Carter from Jersey
That's
City,
right.
New
Right.
Jersey.
There
Yeah.
you
Yeah.
go.
Yeah. Yeah.
So yeah, those things do get likes and clicks and attention and stuff. Um, maybe he's I think he's an honest guy. I think he's just speaking his mind, and he really believes that there's a crisis out there. And this was the guy who was saying, in the wake of the financial crisis, after all the bailouts and things took their effect, that everybody. I remember the comment was something like, everybody sees a black swan with a fat tail behind every rock. So he was at that point very much trying to say, hey, invest in America, be bullish, don't fight the last war. But now he's, as you say, sounding quite dour every time he talks. He says there's a crisis out there somewhere. I
Well,
think
if you want to have a hook to hang your prediction hat on, I guess that's the way to do it. But I'm just not into that kind of gotcha. We used to say about the permanent bears, they're like a stop clock. They'll be right twice a day. And so,
right.
but I'm going to reserve my thoughts on the ultimate market outcome for your question at the end. So I'm ready for you this time.
Oh, okay. Um, Gosh, now
Yeah,
I want
we
to ask that question.
We'll get there.
uh,
We'll get
We'll
yeah,
there.
we'll
get
Yeah.
there.
get there. Yeah,
All right.
yeah.
You did mention energy as one of the cyclicals, and we've seen the last couple of weeks with, I think, with what's going on in the Middle East and China's stimulus too. Oil prices, going up and then back down, and the energy stocks moving with that. What are your thoughts on just that kind of sector right now?
Well, I think the Middle East is just a short-term influence, but China really is important, and China's in the how do we say this, in the crapper. I mean, he was a British inventor, so we can use that.
We can
That
use
I mean,
his name.
China's economy is not good, and that does affect the price of energy worldwide. So I'm not advocating energy stocks right now because they're the one sector that have more bearish than bullish power gauge ratings. So I can't find, except for an occasional coal company, I can't find energy stocks that I'm comfortable buying right here unless you like bottom fishing, which I don't.
Right.
But
The mention
there'll
of
come a
China.
time.
Go ahead.
No, well, there'll come a time late in the cycle when demand picks up worldwide, and because of the central banks around the world, led by the ECB again yesterday, cutting rates, demand will pick up in Europe and then in Asia. So, I think energy is a late stage cyclical play, and we're not there yet.
Okay. Um, the mention of China prompted a question immediately for me. I wonder, I know that the power gauge is mostly made up of fundamental indicators, and then there's momentum as well. And it makes me wonder um, if it spits out any kind of a signal or gives you any kind of a reading when we get this enormous reaction over just a few days after the People's Bank of China announced rate cuts and other stimulus, with two programs being directly addressing the purchase of stocks, like a buyback program for Chinese company, and then actual buying of Chinese stocks. So does the power gauge see this enormous updraft? I mean, boy, they did away with the Chinese stocks topped out in 2021 along with a lot of other stuff, and we're down like the Shanghai index, I know, was down close to 30% recently, and then wham, after that announcement, up 25 or 27% in a matter of 3 or 4 days. Did you see anything from your indicators triggered by that?
Well, a number of the Chinese, the broadline Chinese online retailers have had bullish power gauge ratings for 9 to 12 months,
Mm-hmm.
like JD.com and Alibaba. So they were the beneficiaries of that rally. But the stocks where the fundamentals aren't as attractive um, didn't really light up in the Chaikin power gauge. But I'm not a big fan of investing overseas. I'm pretty, uh, what would you call it? I'm a jingoist when it comes to that. I've always felt if you can't make money in U.S. stocks, then the chance of making it overseas is not enhanced. So, but we have had a number, and they're mostly the Chinese online retailers that have had bullish ratings. But just to give you an example, we had recommended a stock called PDD Holdings, symbol PDD,
Mm-hmm.
and we got stopped out of it on a very, very bad earnings report, totally unexpected. We were sitting on a nice profit. And then, based on what happened that you described with the People's Bank of China, the stock rallied from like 92 all the way up to 154. We got stopped out at about 98 just a month and a half ago. And then suddenly it's back down to 120 today. So
Yeah.
this is volatility that I can't live with. I can live with volatility in US stocks that I understand, where I consume the products, or where they make sense from a growth point of view, like some of the AI and chip stocks. But China just is a mystery to me.
Yeah, the whole episode here. It's like sort of it's a pretty classic emerging market dynamic, isn't it? Just
Yeah.
the economy in the crapper, huge bubble, huge real estate bubble. 70% of the country has their money in real estate, and the market just falls and falls even while the rest of the world is recovering. And then the central bank comes out with a bazooka, which some people
Yeah.
are saying is not quite a bazooka even, and the market's doing fire for 4 days, and then you lose half or more of the gain in the next 2 or 3 days. So it
Yeah.
really feels familiar.
And the power gauge on the country ETFs has been really good. It's kept you out of things like Mexico, and it actually was bullish on Turkey at some point. But
Mm-hmm.
um, if you want to go far afield, our ETF country power gauge ratings are a pretty good guide, and they are a combination of fundamentals, so the underlying equities and technicals. So you do get the benefit of momentum and money flow in the ETF market. But why don't we just try and zero in on U.S. equities and talk about what's
Yeah,
looking good?
yeah. I didn't
Yeah.
want to get off on a tangent, but it's just that interesting sort of episode we had recently. But yeah,
Yeah,
okay,
we
let's
talked a
do
lot about
that.
China recently. So yeah.
Yeah,
Yeah.
yeah, we did.
So capital markets, just across the board, whether you're talking and financials, whether you're talking about small investment banking firms, medium sized like Evercore, whether you're talking about regional banks, money center banks, and now the big investment banks like Goldman Sachs and Morgan Stanley, just top notch results. This is sort of the ideal climate for the investment banks and with the trading department and asset management and M&A all firing at the same time. So I think that's another indication that the bull market has more to run because financials are now leading the market and have been for 6 months.
I see. So that's a forward-looking indicator, in other words,
It has been historically, yeah.
right? Well, hey,
Right.
everybody,
And you wrote
nobody wants
something.
banks to
Right.
fail, so go
Yeah.
ahead.
And you wrote something recently, Mark. I think just maybe a couple days ago on the Power Feed, your free newsletter about rate cuts and what rate cuts in a strong economy, or in
Right.
an economy that's not in recession, and how that um, basically seems like if the Fed is making a quote mistake, that could be a good mistake for the stock market.
Indeed. I mean, if you go back to 1980,
Hmm.
5 of the best 10 years in the S&P 500 have come when the Fed was cutting rates and there has been or was no recession. So it's just a potent mix. Whether it ends up being, pouring gasoline on a fire, that remains to be seen. But I think Jerome Powell, the Fed chair, has done an absolutely great job of managing. I mean, some people will call it a soft landing. I'm going to say there's no landing. The plane stayed up in the air, and it's refueled in mid-flight, and here we go.
It's
So
funny because JPMorgan's analysts were talking about a soft landing, and then the boss is coming out talking about the hurricane or whatever, like
yeah,
his tower
yeah.
predictions. Or his own analysts are saying soft landing, but you're saying no landing.
Well, a lot of the quantitative, and I'm sure you know this, a lot of the quantitative analysts at the major banks, like Mike Wilson at Morgan Stanley and Kalanovic at JP Morgan, who've just been
Sure.
way off their mark in these markets.
Hmm.
They convent. I don't know if the world has changed because I'm very leery of, this time it's different
Hmm.
approach to investing because you do learn a lot from looking at the past. But I think uh, we have a different dynamic in the market than we've ever had.
Hmm.
And whether that's the fact that the US has become basically a service economy, not a manufacturing economy. And so some of the metrics that people have used to, like the inverted yield curve and leading indicators, have not done their job this time. Remember, the biggest leading indicator in the LEI is the S&P 500. So
Yeah.
momentum lives in the stock market.
Yep. It's an interesting comment about the economy. Recently on Twitter, Mike Green from Simplify Asset Management, a past podcast guest for us, he says, how much of your time do you spend using Google and Microsoft Office or whatever, and how much of your time do you spend sourcing, raw copper? You know, it's pretty clear what we're all doing with most of our time
Yeah.
these days, and we're not worried about sourcing copper. So,
And time equals revenue if you're buying online and seeing ads and clicking through. So it's not
mhm,
just, when it was message boards back in 1999 and 2000 on Yahoo, that was pretty much of a waste of time. But now it's
mhm,
about commerce, e-commerce, and
okay.
the world has changed.
Do things like rising, let's just pick on rising auto loan delinquencies bother you at all? I mean, it's been pretty substantial. We're back up to serious, like, you know financial crisis level type numbers in the delinquencies.
Well, that's above my pay grade because I'm not an economist
Okay,
and
don't care. Okay.
I wouldn't even begin to know how to correlate these things. But B, that's the stop clock scenario.
Hmm.
That auto loan delinquencies have been rising for 9 months, I think. And I just, for me, if you want to make money in the stock market, you find the strongest stocks and the strong industries, and you don't make predictions or extrapolate from bond prices, yields. I mean, even the bond market got it wrong after Powell cut the rates. The bond market went down, not up.
Yeah, the longer
You had a
term yields.
40,
That's right. Yeah.
10 year, you had a 40
Yep.
basis
10.
point increase in the 10 year up to 408. And if you believe the bond market,
Hmm. And 30
then
bips on mortgages. Yeah.
yep. And in theory, that's not good for home builders, which is really a home builder is the engine that drives the economy, other than e-commerce. And I just find that it's
Yeah.
distracting and something that I have never believed I could do. You know, that someone once said if you put all the economists in the world end to end, they
And
still wouldn't reach a conclusion.
conclusion.
And
That's
that's pretty much the way I feel about it. And I'm happy to say above my pay grade. If you ask me what are the strongest stocks and the strongest industry groups, I'm going to raise my hand and tell you what I think. But if you're
okay.
asking me to extrapolate where the market's going based on numbers that, by the way, get revised. I mean, look at what happened to
Yeah.
the employment numbers. Everybody was dour, and then suddenly July and August got upgraded by 70,000 jobs, and we went from worst to first with the September jobs number.
Yeah.
It's sometimes simpler is better, and you've been around long enough to know that you can always pluck a bullish or a bearish statistic. And
Yeah.
that ultimately is why I stopped going on CNBC, because they'd always pair you up live on the floor with Bill Griffith, who was a good friend on the closing bell. They'd pair you up with a guy who had a contrary view.
Yeah.
So if you were bullish, they'd find a bearish guy. And typically he was some boisterous, egomaniac, and he would drown me out. And
Yeah.
because you can always pick cherry pick, if you will, numbers to validate any conclusion in the stock market. But
Right.
momentum, you can't. Momentum is momentum, and earnings are earnings. And the S&P forward earnings are just killer. They're making new highs.
I won't name any names, but I stopped doing Fox Business and other appearances for very similar reasons. Um,
Yeah,
it's just a bad
Oh,
dynamic.
Dan, I've heard you mention that economists line, end to end line before as
Yeah,
well.
yeah, yeah.
So yeah,
It's true, and just I'm so pleased
nobody's
when
asked me
Mark
to be on
Mark always says
CNBC or
this.
Fox Business yet, but yeah.
Right, right. Mark always says, don't make predictions, and I've been like
but
chanting this mantra, prepare, don't predict. Right.
I
If you
love it.
think you need to hold a little gold or cash, whatever, but don't sell your great companies that are compounding like crazy. Um,
Agreed, agreed. There's
yeah,
an old floor traders mantra, which is make money, not predictions. And that's the
yeah, yeah.
same general idea. But you do have to have a plan. Now, right now, we didn't have a volatile year, even though some people would tell you we did, except for VIX popping up in the September decline.
Yeah.
But we have had a lot of volatility in individual stocks.
Hmm.
And one of the things I'm going to talk about in Las Vegas in my presentation is the fact that 2024 was a typical year for the stock market. We had two pullbacks of 5.5% and we had a 4.5% pullback, which is not strictly speaking a pullback of five. And we recovered from all of them. But if you read the headlines around each of those pullbacks, it looked like the world was coming to an end. Now, maybe it's because it's an election year and the mainstream media likes to hype uh, the economy. But if you take volatility, particularly individual stock volatility, and turn it to your advantage, that's how you can make money in this market climate, in my view.
I'm surprised at the swiftness with which the mainstream media, especially the financial media, will bring out the markets in crisis banners and get really dour over a couple of days of negative action.
Well,
It's
it's the clickbait economy that we're in. That's
yeah.
how nobody makes money selling. Well, not nobody, but the New York Times doesn't make money selling newspapers. They make money when you click on a headline and go to their website. So, we're in a different world from that point of view, in my view. But
Yeah.
here,
Where
I'll
did
give you an example of
Mhm.
volatility. We were fortunate enough to recommend a stock called Constellation Energy, I think 3 months ago.
Yeah.
Uh, and this is the company that's reviving a shut down nuclear plant, 3 Mile Island, and happens to be Baltimore based. And the premise was that data center electricity demands need to be met. And we were fortunate enough and took a 45% gain for our clients in just, I think, 7 weeks. When the stock
Nice.
spiked up, Microsoft announced that they were buying their whole output. Well, guess what? The stock went beyond where we said to sell it, which was in the mid 60s, went to 83. And then 2.5 weeks later, it was 53, just a week ago.
Right.
And the blame, if you will, is placed on a Reuters article that was not really bearish, that included Constellation Energy. So these are volatile markets. And if you have a strong view about stocks, you talked about stocks that compound year in and year out, or you believe in a story, you've got to bite the bullet and take advantage of this and not be spooked by it.
I
So
Yeah,
think
that
it
brings
that's
up
was.
what we're trying to do.
yeah, that brings up an interesting question to me. I was actually just thinking about based off, kind of these nuclear power deals that a lot of the tech company, you have Google now, Amazon, Microsoft. Um, that's like, you always hear the buy the rumor, sell the news quote sometimes. But to me, like, what are your thoughts on this, on like where we might be in that trend with nuclear energy getting linked up with AI and the tech companies? Because when I see when I see the mainstream headlines, like, all right, that's done. That story is done now. But what do you think? And I don't know if I think that or not, but that's like
Yeah.
one of my
Well,
early reactions.
I think if you believe, as I do, that AI is in the early stages of revolutionizing businesses from supply chain management to customer support and all the way down the line, then I don't think I think it's early days for nuclear. I wish there was a viable small bore, small reactor nuclear stock that we could recommend, because I think that's where it's headed. You've got all these Rust Belt economies, and maybe this was you, Dan, at an editors conference. I'm not sure, but someone from Stansberry proposed this, and I actually embraced it. That you've got all these Rust Belt cities with factories that are obsolete and people out of work, and companies like you just mentioned, Corey, Microsoft, Amazon, particularly announced something yesterday about building these small nuclear reactors. We could revitalize the Rust Belt towns and cities that are dying, or at least from a jobs point of view, are dying, if we built small nuclear power plants to satisfy the data center needs of the AI revolution. So I think it's early days, but finding the right stocks to buy, that's tougher
Right.
because of what
I
you said, Corey. There's been a lot of exaggerated moves in anticipation.
Okay.
Well, I didn't say that, but I sure wish I had.
Yeah, I perked up. I was on the phone and dialed in, and I did hear someone say it. And I can't tell you who it was though.
Well, good. Yeah, because I was just thinking about. I was thinking similarly. Like, what's a small cap nuclear company that nobody's heard of right now that's actually, um, could be the next company that
Mhm.
links up with one of these big tech companies or whatever it may be. I don't know, but yeah, that's kind of where my head was at with nuclear too.
Yeah, there's a
Yeah.
couple of Bitcoin mining companies that are now getting into data center electricity projects. One particularly down in Texas, is because they do have the expertise at figuring out how to satisfy high energy needs, because they were
Yeah.
pioneers in Bitcoin mining. So but these are mostly private companies.
Right. As soon as you said, well, I'm not an economist, I don't know this, I don't know that, but when you ask me you know, what companies I like and what sectors, then I light up. So let's keep you lit up. What else you got?
Uh, Lighting up with aerospace,
Oh,
software
right.
always. Chip stocks are still hanging in there, although it's mostly NVIDIA right now. Well, Taiwan
Mark,
Semi today, great report.
you just said software always. Did you not? What
Yeah,
that
well,
comment
this
intrigues me.
is who's the guy from Silicon Valley who I think it was one of the venture
Andreessen.
capitalists who said software, this was, I don't know, 2016 or 2018, software is eating the world. Software
Andreessen.
is,
Yep.
yeah, it was
Andreessen.
Marc
Yeah.
Andreessen. Yeah. Um, can you get overextended? Yeah, you look at Adobe, which is basically a software company, and it had
Hmm.
a huge run in anticipation of AI integration into their products. Then it came back down to earth. But long term, if I had a bet on one industry, it would be software, because that's the whole key to maximizing the technology revolution that is faster chips, AI, the whole cycle of bigger, faster, longer. So, to me, you find the software company and you believe in their products and the market agrees with you, that's where you want to be.
Have you ever owned? I was trying to remember the name, and so I just had to type it in real quick. Have you ever owned Constellation Software, the Canadian company?
No, what do they do?
They roll up software companies. They're like the Warren Buffett of software. And you
Huh,
can, like, if you're me and you want to buy something cheap, you can never buy it because it's just they keep rolling up
they
and
keep
they
buying it.
earnings keep rising and people keep discounting, that going on and on and on and on. I think a friend of mine, um, Chris Mayer, I think he bought them some time ago and is still holding it. And it's if you look at the 10+ year record, it's like whoa, it's it's pretty stellar. Um, but
Yeah,
it's
it's not in our system, so I haven't looked at
okay,
it. It's
yeah,
that company doesn't trade in the U.S. is my guess.
right, yeah, it's like it's got a pink sheet symbol, but that's
Yeah, but the other um, sort of synergy that makes software attractive to me, software stocks, is that AI and software are now converging.
mhm,
So you have companies like Adobe, you have threat detection companies that are software based as opposed to hardware based. So we're talking cybersecurity stocks. And suddenly, with the ability to integrate AI and real time updates of their threat detection databases, you have what I consider to be supercharged opportunities long term. Because AI, you look at airport security, and uh, they're now using AI to update the threat protection software that they have in their walkthrough. What would you call them? The security protection, and I think that's long term the real synergy in software. Companies that are using AI to enhance their software, whether it's Adobe, threat detection, customer support software, it's everywhere.
mm,
Now, are we going
nice.
to get a bear market in stocks? Sure. Are we going to get pullbacks in these companies? Yeah, but that's the life cycle of technology innovation in the stock market. It's always been that way.
Right.
Man, I
And
feel like I'm still not
look,
giving AI enough credit, like
yeah,
of the potential. Like I think part of
yeah,
the reason is it's I use technology all the time too, but to me, it's still hard to see it, like in front of you.
Yeah.
I mean, I know things are happening, like you just said, but it's still I still feel like maybe I'm not giving enough credit. Maybe that's why it's got a lot more room to run for growth
right.
wise, investment wise. I don't know.
Well, you
It
raise a
probably
good
does.
point. Yeah, I mean, that's a really good point. If all you know about AI is through ChatGPT, then you're not going to have a very strong
No,
vision of the future
right.
because it feels like a gimmick. But
Hmm.
if you think about what ChatGPT and all of the enhanced versions of it can do in terms of coding,
Hmm.
Google coder software coder replacements. I think it was Amazon who said they're going to replace 400 software developers because of the enhanced AI capability for building code, for writing code
Mm.
and updating it. So a lot of this is going to be under the hood, and I agree with you on that, Corey. It's you gotta believe. I think last time I was on, I compared where we were, and what was that? Probably 6 months ago. I compared where we were in AI and the NVIDIA chips to the introduction of the Netscape browser in 1996, and that really set off 5 years of productivity enhancements, profit margins through the peak in 2000 of the internet boom. And I really believe that's what's going on today. Now, the Netscape browser would democratize the internet, and I think AI, ChatGPT, has democratized AI models and machine learning. So, but you're right, a lot of it is not obvious unless you dig in, and that's what our team does. If a stock looks attractive in the power gauge, we'll try and dig in and see where they're using AI if it's in the software sector, and that does lead you to some great opportunities.
I see. So you let the power gauge guide you, and then you sort of take a more bottom up discretionary kind of approach and say, what are they doing that's got this thing on our radar screen?
Well, in some of our newsletters, in our core newsletter, Chaikin Power Gauge Investor, we're top down. We start with the best industry groups, best sectors, industry groups, and then the best stocks. But in our Power Profits newsletter, we're bottom up. We're looking for just what you described, stocks that look attractive or have a story in the case of Constellation Energy, where
Mhm.
fortunately the power gauge was bullish as the story was getting press. And by the way, at the Stansberry conference, going to have a really exciting pick for my expert panel that,
I have no doubt.
quite honestly, nobody I've never heard of before, but boy, is it exciting.
Oh man. Now I can't wait. So I can't wait for that. I can't wait to get to the final question. You're just firing all cylinders today, Mark.
Uh,
Um,
it's because I'm hyped up on amphetamines or not amphetamines, but whatever you
yeah,
take to mitigate a
r-
cold,
right. Antihistamines, yes. Yeah,
antihistamines.
they make me jittery too. So,
Yeah, that's
yeah.
that's and the coffee, the
All
combo.
right. So we know that we when we schedule a Mark Chaikin interview, we need to get the antihistamines and coffee into him. That's we need to
Right.
we need to feed those into him,
Well,
or
a
just
lot
get
of
somebody to
energy
sneak
here.
it in his
Me too.
coffee.
Yeah. Yeah, me too.
All right.
Going back to that, Netscape um, comparison or
Mm,
Netscape Navigator comparison in AI. I was just looking the other day. This year so far, and I'm sure you've seen this too, the best year for S&P 500 since 1997, which would be the year after Netscape Navigator came out and the early internet
Yep.
boom and everything. And I was looking at that and saying, you know what? Maybe it makes a whole lot of sense that this crazy market behavior, you have valuations where they are, you have central banks thinking they need to juice economies, you have AI still in the early stages. Like, are we just headed for something similar to post 1997, which means they're good times, and then what happened with the dot-com bubble.
Well, but there was anybody who shorted tech stocks in 1996, 7 got carried out on a stretcher. So I'm not, there's a lot of room, and now you're getting close to my closing comment,
Oh,
which you could
sorry.
almost
All right.
anticipate.
Sorry about
No,
that.
well, it's not. It's there's nothing new in there, but I just think there's a lot of room to grow. When you look at what the stock market's all about, it's about earnings and it's about momentum. And at the end of the day, it's about profit margins because profit margins affect PE ratios. Interest rates in the tech sector, obviously, high rates, lower valuation. But in general, if profit margins are going up, then you'll see analysts raising their estimates and more comfortable with the valuations where they historically look high.
Hmm.
Uh, and profit margins are going up. And that's what happened between 1996 and 2000. It wasn't just the internet boom, but uh, the browser basically enabled companies to maximize the internet to the benefit of profit margins. So, if profit margins are in fact going to do what I think they're going to do, which is to rise for the next 4 or 5 years, then X the normal cyclical swings and maybe a bear market in there somewhere. I think we're higher on balance for the rest of the decade.
Oh, bullish for
Oh,
the rest of the
all
decade.
right.
Okay.
Yeah, but I mean, there's going to be a bear market in there. I don't know when, maybe 97, maybe 96, 2026 or 27,
26, 27.
inevitable.
Yeah.
Yeah,
It's
but
yeah.
but I'm not a buy and hold forever kind of guy. So along the way, we're going to try and guide investors in our newsletters in terms of what we think is playing out in the stock market. But in general, if you said, Mark, I have two choices. I can try and time the market over the next 5 years for my grandkids, or I can buy an S&P index fund and hold it for 5 years. I'd say buy the index fund and hold it.
All right. Does the power gauge do you ever short stocks based on power gauge signals? Put it that way.
We uh, we don't have a newsletter that goes short. We have in almost every new rollout uh, put together a list of stocks that should be sold or avoided. And ironically, those lists have been like gold. There must be a couple of hedge funds who subscribe just to get those lists. But the first time in May of 2021, we had a 10 stock list, as we usually do, and they were down an average of 69%. All 10
Wow.
of them were down. And
Wow.
that's what the power gauge can do, because I get together with our copy team and our editors, and they say, okay, Mark, here's one of the bonuses that we want to offer with this new newsletter. Can you come up with a list of stocks to avoid? And it really is not hard at all. A good example recently, last year, has been Charter Communications, which, by the way, the power gauge just turned bullish on Charter after being bearish for a year and a half. And it made sense. Cable cutting and streaming and how it's impacted the traditional cable companies has been brutal. And so you do have the power gauge to tell you when the fundamentals and the momentum is so bad that you got to step aside. And
I
that's
saw a
actually
bullet.
the fun part. But we don't write about it just because short selling is obviously unlimited risk and
Hmm.
fraught with danger in a bull market. But if someone's running a hedge fund and they're not taking advantage of the power gauge, they're missing something.
Yeah, sounds like it. So at some point, I mean, at some point, if there's a bear market, though, you're going to be getting a lot fewer buy signals, right?
That's correct. And
Yeah.
we'll try and focus on shorter term opportunities. So we have a new newsletter
Okay.
coming out the end of the month, which is near and dear to my heart. It's called the Chaikin Smart Money Trader, and it's taking Chaikin Money Flow, which I developed in 1982 and put into the public domain, and going back to basics, which is how do you see what the smart money is buying? And Chaikin Money Flow turns out we developed a concept called persistency of money flow, the tendency of strong stocks with good fundamentals to close high up in their range day in and day out, even on pullbacks. And so in a bear market, we're going to rely more on the shorter term opportunities that you can take advantage of in using Chaikin money flow, and particularly what we call persistency of money flow. And by the way, not all bear markets, as you know, are not monolithic. So as the internet bubble burst and was unfolding, small caps were up in 2021 into 2022. And just recently in 2022, energy stocks were on fire in the middle of a bear market. So uh, I don't want to be a Pollyanna and say that you can make money hand over fist in a bear market by buying stocks, but
Yeah.
intelligently applied, the power gauge can be your friend.
Okay. Fair enough. Yeah. Um, but and still on the long side though. That's what is interesting to me. Um,
Yeah,
you know, you just
you know,
you just look at it differently and use those shorter term opportunities. That's interesting to me.
well, back in the 70s when I cut my teeth and bear markets were long, brutal affairs. Gold mining stocks did extremely well in 73
Hmm.
4 because
Hmm.
people were concerned about inflation. And so there are always pockets of strength. But yeah, I mean, I've seen bear markets where they take everything out. But
Yeah.
more recently, because of ETFs and stuff, there are typically pockets of strength that you can identify and take advantage of.
Speaking of gold mining stocks, I was about to say, you must be getting some buy signals there, no?
The mining stocks have shown some interesting bullish ratings in the power gauge. Newmont had a very bullish run for about 4 months with the power gauge and is making new highs. Yeah, there's been a number of mining stocks. Sort of not my thing, so I don't focus on it, but we have an analyst who really does a good job with that. And now, with the price of gold up at above where it is it still above 2,600 or is that?
Yep,
That is
making
a
a
good
new
question.
high as we speak, 2690.
There you
Wow.
go. So, but a lot of these power gauge ratings have turned to neutral now, just because price has gotten overextended and we've got some mean reversion factors in the power gauge. So, from a technical point of view, they're making new highs, but a lot of them, are experiencing what we would call mean reversion, or at least gotten ahead of themselves from a price point of view. But
Yeah,
again, not
even
my thing. One that's been consistently bullish since last April was Kincross, KGC,
oh,
and
Kinross, yeah.
that's still bullish in the power gauge, and it's gone from what power gauge turned bullish when it was trading about 650, and it's 1022 this morning. So and it's stayed and smart money has been buying it all the way. The Chaikin money flow has been strong since March, day in and day out.
Interesting. That's interesting. If you look at just I guess the biggest ETF is GDX. The trip up here in this leg up has been really volatile. I mean, it's jagged. It looks like a jagged mountain peaks. You get a rally and a sharp correction, but not as low. And then, a higher high and then a lower low just above. And it's really been, I could see where it would be difficult for folks to hang on to them, frankly, um, this whole trip up here. It's been,
Well, interestingly, the power gauge for VanEck, which is what you're talking about, turned bullish on April 1st at 32. And you're right, there have been four corrections down to our lower volatility band or our long-term trend line, starting in June, then again in late July and September. And they were actually, and then in October. It actually hasn't been that hard a ride because it's been a stair step up since April 1st. Again, gold is not my thing, but if you are watching the power gauge rating for GDX, you would have been in April and understood what the price action looked like. It pure pendulum swings to an upper volatility band back down to the lower. And interestingly, they seem to have coincided with some broad market declines, those pullbacks.
Hmm. Yeah.
It's
Yeah.
just that they get exaggerated in gold, I guess.
They do. And lately, it's just sort of, I feel like you can almost buy everything right now. And it doesn't surprise me at all that, gold might be performing pretty much right along with the overall market, just in a more exaggerated fashion, given the
Yeah,
nature of the commodity.
that seems to be what's happening. Although,
Yeah.
buy everything typically gets us in trouble, doesn't it?
Sure, sure. But I just buy everything, of course, doesn't mean literally buy everything, I should say
Right.
for our
Okay.
listeners, but it just feels like this is people are excited to take risk. I mean, junk bond spreads are tiny. Um, the markets are up, the valuations are high, and yet people are buying and loving it, and and there are like global GDP growth and other things. Like you can point to all these things that everything looks kind of normal. So of course people are buying. Unemployment's
Well,
really low. It's
how about the over $5 trillion in money market funds that still hasn't,
sure. Yep.
dipped their toe in the stock market? I don't know if we'll ever see that because people are using money market funds as surrogates for bank accounts these days. But
Right.
if some round of Fed rate cuts makes people leery about staying in short-term treasuries, the money's got to go somewhere.
Right. We know historically that there has been a strong dynamic of looking elsewhere when the yields were non-existent or way too low. So
Yeah.
if this cycle, if this is a you know if this is a full-blown cutting cycle, um, it would make a lot of sense to see that. And at some point, I don't know, when the money market goes from 5.5 to 5 or 4.8 or whatever it is now, maybe not, but when they start making less than 3 or something.
Yeah. Then they wake up. And by the way,
Yep.
I'm not totally convinced that the Fed's going to cut again in the November meeting, but I don't think it matters to the stock market. Just,
No.
a
Yeah.
little
Oh,
bit of a
you don't
short
even think
term.
November. You don't.
Yeah.
Well, I think that the employment numbers came in so strong right after the rate cut in early October that there were enough hawks on the open market committee that they could have a solid debate after the election at the Fed open market committee meeting and say, okay, we don't really have to cut because we cut 50 basis points last time. Maybe that was overkill, and so we can
Hmm.
rest for a bit. So, but again, I don't. It only matters because it's in the headlines, and some Wall Street analysts are bearish because they don't think the Fed's going to cut again. So,
Right.
you just want to counter that. You need an antidote to that bearish outlook if you're me.
Right. All right.
Yeah, interesting. Because yes. Sorry, Dan. Go ahead.
No, 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 no. I think we are finally at the point where we can, where we could ask Mark to. I've been on the edge of my seat since early
Oh
in the
no.
show here to ask the final question because Mark said he's got a great answer for us, and we are finally here. Mark
Well, I'm
taking the
prepared.
final.
I don't know if it's
All right.
great, but I'm prepared.
Well, I think that's rare. That's very rare. Most people say, "Oh, I wasn't prepared for this." And in fact, I can't remember a guest mentioning the final question at all before getting it. So uh, this
Well,
could be an
maybe this is because my
unprecedented moment.
son, my son Andrew, has been on Jeopardy twice. That I'm keyed
Oh,
in on the final question.
Oh,
okay. There
geez.
you go.
Burying the lead
Cool.
here. Oh my. Okay.
Yeah. Um, yeah. So the final question is the same for every guest, no matter what the topic. And I won't go through the usual caveats because you have your answer all sussed out. So I'll just ask it. Mark, if you could leave our listeners with one final thought today, what would it be?
Sir John Templeton, markets mature on optimism and die on euphoria, and we're not anywhere near the euphoria stage yet. And then I'll add uh, John Maynard Keynes, who said markets can stay irrational longer than you can stay solvent. So go with the flow and listen to the market and enjoy the ride.
All right, that's a great message. Listen, Mark, thanks for being with us. It's always a pleasure. The time always flies by when we're talking with you, and I look forward to shaking your hand in Las Vegas and having a chat and maybe a drink.
For me as well, and Corey, what a great duo you guys are. Really enjoyed it. Thank you.
Thank you. Look forward to seeing you.
Yep. Be well.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.